This is trade of the week for the week, and we'll break it down every single confluence. We won't just break down why the initial trade worked, but we'll also break down why the next time price came back up to this level, why it didn't work, and I'll show you how to spot that using volume profile and how a developing profile complements those previous day volume profile levels and helps you determine whether or not you should trade from the level itself. So trade was taken on Tradeovate. I've got the position size tool here, but here's a screenshot of the executions from my Tradeovate account. The entry was at 82150. Stop loss was 5 points. Take profit was 5 points. For the most part, I'm using a 1-to-1 take profit. I like to scalp versus going for a positional play, but this also did turn into a really nice rotational play to another opposing value level, which we'll talk about in a second. Let's break it down. So first of all, we had on the chart our previous day value levels. So if we zoom out, this is what the value levels look like at the time. Got all the previous days levels there from the previous day's regular trading hours profile, value area high, point of control, value area low of the previous day. And then we zoom in, start a developing profile at 6 p.m. Eastern time. And at the time of my trade, this is what the profile looked like. So let's run through the confluences of this trade here. So price broke below the previous day value area low, did not find support, and broke to the downside. And people often ask, okay, yes, you took the retest on this side for the sell, but why did you not take the buy on this side? Because price was above the support level, why did you not buy here? Let's run through why you would not take that as a buy. Here is point of control of that developing profile. And look what happened with price. Price came down to point of control, melted through point of control, little to no reaction, tested from the underside and rejected to the downside. So first of all, fair value rejected below. So using point of control as a sort of compass as to where price is more likely to go next is hugely important. So seeing that and seeing price fail below point of control and fail to come back above it on the next push up and reject to the downside will be clue number one for you not to look for a buy at this point and instead wait for that to break. So waited for it to break. Price made a nice strong leg to the downside through the previous day value low support level. And what I was looking for is for some confluences to stack for the retest on the other side. So what we have here at the time of my trade is we have number one, the previous day's value area low, obviously, which is your first confluence. Of course, when these levels are broken, we look for it to retest on the other side in context. So that was context number one, previous day value area low. Confluence number two is we have the developing session value area low, which on its own doesn't mean much, but when in conjunction with other confluences, aka the previous day value levels, it then starts to take on some meaning. So we broke away from value, breaking below value area lows of yesterday, below discount, and broke below discount of the current session price, indicating, at least for the short term, weakness in the markets and that sellers have taken control. And often when price breaks away from value, it comes back to retest that value level to make sure those sellers are still there, hence where we get our entries. So we have current session value area low, previous day's value area lows, two confluences. And then you can see on the profile here, there's no distinctive high volume node in this profile. However, we do have a distinctive edge. If you see on the profile right across here, we have the distinctive edge of the profile. Now, when you're looking at high volume nodes for support and resistance, you're looking to trade those sharp, hard edges. So there's a hard edge right there at the edge of value at the lower end of the current session value low, and also right in line, that edge right there, right in line with that previous day's value area low. So we had 1, 2, 3 confluences on this trade. You can even argue 4 with the context of that failed point of control, making that a really strong area to get short. So I get my trade short at this level and take profit at 5 points, move my stop to break even, leave a couple of remaining contracts on, because after we failed at this level, I wanted to see price rotate down to the opposing value level at overnight value high. However, unfortunately, I've trailed my stop down a bit too tight, and my running contracts also got stopped out at plus 5 points, which is still good, still over $3,000 banked for me. But as you can see, that trade ended up running all the way to target and getting almost a perfect reversal at that overnight value high that was the extended target. Now, I want to cover why. As you can see, the next time price came back up to that same level, but this time it somewhat broke above and you didn't get that clean rejection. And I'll show you why. And this is why it's important to trade more than just the value levels on their own, but it's important to build context using the developing profile to filter out trade ideas. So if we pull the profile across to the next time price came up to test this area, I'm going to show you a couple of things first of all. So there actually is a valid short setup from this level the next time around, but there's a small clue as to why you maybe would want to avoid it. So let's first look at the valid short setup. It's obviously at the time of price coming up back up to that value level. You have the current session value area high is across there with the previous day value area low. So two confluences, shorting in this zone isn't the worst idea, but as you can see, it's very short-lived, and let me show you why. And this is a good way to try and determine how to avoid fading versus waiting for some sort of breakout, is if you see in the profile now, a reasonably large node is developed in the profile across these highs. And when price is able to push up and break through that point and is now trading at the value level, but is supported by a high volume node developed underneath, you are less likely to get your proper fade play off these levels because price now has a support level that's developed right underneath the level you're trying to fade. So if you're trying to fade the value high here, as you can see, played out both times, price came back, did fade off the value highs, but failed to break through that support shelf. So we're playing a game of probabilities here. If you have a high volume node developing below a level you're trying to fade, of course that could break in some scenarios. Support and resistance doesn't hold forever. But if a support level is forming below a level you're trying to fade, why would you be looking to trade through support when you should be looking instead for, okay, if support's forming at an area where I'm looking to fade, perhaps a potential breakout is about to occur. The valid approach here would be you could short at the value high, but you'd have to, the sensible thing would be to make it nothing more than a small scalp and take profit at that opposing support level, which yes, you could have done 1-2 times. And then the other clue as to why you would not want to look at fading this the next time around is that yes, point of control of the current section actually shifted down, which would be a bearish sign if price was able to hold below point of control and continue down. However, once fair value developed at the lows here, it was able to break back above and hold above fair value. So you have a couple of clues of context on that second test of this area versus the first test showing you that, hey, the fade might not be the best play. Start to look for a breakout or wait for a cleaner profile setup. So that's one way you can use the developing profile in line with those previous days value levels and previous overnight value levels to build context and filter out the good trades from the bad. This was definitely one of the best trades this week for me, taking on my take profit trader funded account, and really happy with that trade setup. For those of you guys who trade the Asian sessions versus the main New York session, it's a good example of showing you, yes, there is actually good opportunities that occur in the Asian session as well. It's not just the New York sessions or the London sessions. If you're an overnight trader, there are plenty of opportunities. And the beautiful thing about volume profile trading is you can find an opportunity, a trade setup any day, any session. There's almost always a setup available within that hour you come to sit down and trade. So thumbs up if you found that trade breakdown helpful. I want to do these at least once a week, deep dive into some technical setups. If you do want to go deeper, in the description you'll find learnvolumeprofile.com. That's a complete volume profile training course, which you can go through if this style of trading appeals to you. And again, this trade was taken on my Take Profit Trader funded account. Highly recommend them as my prop firm of choice at the moment. I'm also officially partnered with them. So if you want to try Take Profit Trader, you can use code CAMCAP, CAMCAP at the checkout for 40% off and no activation fee. Otherwise, I'll see you guys on stream next week. Have a safe weekend. Be good.